And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family, and welcome to the market prep for Tuesday, March the 7th. A very important day. As always, we're going to be seeking accurate context, good risk management, and patience in our trading. My name is John Hoagland. Thanks for trusting me with your time. So today is one of the big days that we're looking for this week. Today at 9 o'clock, Chairman POWell speaks to the Senate. He does the same thing tomorrow at the same time in front of the House of Representatives. We also have wholesale inventories due out at 9 a.m. Central as well. Not expected to be very impactful, especially with all the focus really going on what Chairman Powell will say. Stock index futures, largely steady, maybe a little bit higher before Powell's testimony before the Senate Banking Committee. Lots of questions as to will he remain confident that, in his words, disinflationary process has begun. Will he still remain that confident? He's, of course, expected to reiterate that further rate hikes are needed if data continues to surprise to the upside. The rate would need to be higher than anticipated. So all of these anticipations on what he's going to say, who knows? Crude prices have continued to battle the fight of supply versus demand. Little change in prices here this morning in crude oil, and of course we'll be checking that on the charts here very shortly. VIX basically right where it was yesterday at this time, actually a little bit lower, but higher on the day, 1880. The dollar index basically right where it was yesterday, 104.49 last I checked this morning. At the same time yesterday, 104.46, and the yield on the 10-year up just a little bit, 3 basis points. At not 3.93%, 3.93%, 3.9% same time yesterday. So nothing really big impactful on those numbers this morning. And as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, love, and subscribe to our YouTube channel so you get notified when we do go live. Today is Tuesday, right after the market prep. We'll be having Make Hoag Money. Might be interesting because it's going to be really kind of the Chairman Powell beginning of his speech will be at 9 o'clock, right almost smack in the middle of Make Hoag Money. We'll see if we can make some money on this. And then that's really kind of it for the day until the market reflection. So we'll be looking forward to seeing everybody at Make Hoag Money and the market reflection at the end of the day, of course. It's good to see everyone. Bear goes long. Good morning. Lacey's been really dawdling this morning. She's got to take care of some business, but she's going to have to wait for that now. Shaw, good morning. It is Jibber Jabber. A-Team Jibber Jabber Tuesday. Rick, good morning. Randolph, love you. Dan Trader, good morning. Stephen Vander Vecken, good morning. Rooster, there was somebody else crowing in here yesterday, or was that you? Timothy Marks, good morning. Alfred, my open interest never reconciles with yours. I take the total CME number at final. Any quick thoughts? Yeah, we'll take a look at that. Actually, it's the change. Well, I'm in the morning, Alfred. I'm looking at the preliminary numbers on the bulletin, and then I'll usually round them to the nearest round number. But it's not until after 9:30 when the final comes out when we find out what actually the number is. The open interest number apparently is a very difficult number to calculate, even for the exchange. We've got if we have time here, Alfred, I'll show you the link to the bulletin that I use. Here it is. And maybe we can get lined up this way. Here's the bulletin. Brian, good morning. Shaw. Do not have a link handy for the Powell testimony, although I think you can watch it relatively close to live on financialjuice.com. John, good morning. Bill, good morning. Rusty Golfer. Terry King. Shy, good morning. Kevin Laffey, good morning. Kevin, Haggle Matters. Mikkel. Julian. The black cardigan. Yeah, cardigan. Yeah. I don't have the rally cardigan on today. I don't know. Of course, it doesn't really make a difference, but somebody says that the gray cardigan is much more friendly towards upside participation. RCU, good morning. Keith, good morning. Alejandro, yes, the center of the universe has been griping this morning, and the yard is very wet from some rain we had yesterday. She doesn't seem to like that very much unless she's playing around in the mud. Good morning, Scott Saw, and he conquered. Travis, good morning. Gnostic, Brian, Don Clemens, good morning. Back from jury duty. Guilty. Oh, yikes. I'm glad you're back, though, Don. I'm glad you're not guilty. Andy Bleed, Dr. VJ Sajatan. Can you teach on British pound US dollar? Well, we do have one currency that we do look at here on the market prep, and that's the euro US dollar. Don't really have time to add too many more products, but although stay tuned, we are going to be adding more time to the prep and to Make Hogue Money and our offerings here on YouTube and in the Zoom meetings, of course. Jason, good morning. Luke, Mark, O, David, Sarah Hall, prayers and love to you as well. We are going to jump into the charts here in just a second. I just want to pay honor to a great man. This man right here. My dad. It's his birthday today. He would be 97? Yeah, he'd be 97 today. Here he is, looking much younger than that, in his early 30s. He's a handsome man. He's a great man. As a teenager, I was pretty much a handful, and he never gave up on me. He loved me no matter what. So happy birthday, Dad. Miss you very much. You're a great man. All right, let's take a look at the charts now. Okay, S&Ps, the daily, that's where we usually start here. Let's start there. So we have our reversal pattern here. A lot of folks are kind of noticing that, taking a look at where the market can go. I mean, when we think about where this market is and where it's been, this is a weekly chart. We've been range bound in large part since June of last year, maybe even earlier than that, June, August. We've got a low here. We're really just kind of in this range, and we've been in this range for quite a long time. In the longest of time frames, this market is range bound, and maybe that's one of the difficulties that a lot of traders have been dealing with. So back to the daily chart, excess on the low, excess on the high yesterday, lots of expectations for big moves today with Powell speaking. We've got a very small overnight range here, which I think would be, kind of expected. Adding 7,300 in open interest yesterday, that's the preliminary number. Again, that may be close to or sometimes a little bit off from what the actual is. Yesterday, they were saying 11,000 positive open interest here on Friday. It came out like 2,600, much smaller than expected, which makes me kind of feel like this move to the upside has fallen a little bit flat as far as as far as the auction, the health of the auction process, I mean, this is a reversal that we would think would bring in a big change in open interest, which it really sort of has not. We did add on the second here on the reversal. We did add 15,000, but again, yesterday, day before yesterday, Friday, only adding 2,300 in open interest. So there's a little bit of a hollow feeling in that rally that we did put in on Friday. Yesterday, again, looking at 7,300. What did the market do? Well, we know that the market opened with a gap. It couldn't close the gap. We rallied. We finally closed the gap late in the session. Where are we now? Well, we're in range, pretty close to value. No real overnight inventory with which to speak of. Very narrow overnight range inside the regular trading hour and extended trading hours from yesterday. We don't have a new recent high. We talked about that yesterday, how the market just does not like to leave recent highs and all-time highs in the overnight session. So we did take that out yesterday. Lots of shadows on the tops up here. We got a relatively close to 40.90, which is that week high that we've been showing everybody about. We did not get there. We've pulled back. We're just now waiting for information. We are just waiting for Chairman Powell because, as we always say here on the Market Prep ACH, anything can happen. Take a look at the TPO chart from yesterday. We have kind of low excess on both sides of the market. It's a normal variation trading day. A little bit to the extreme, to the upside. And we spent a lot of time up here yesterday, which brings our point of control TPO up here and also the volume point of control up here. But we saw that we probably ran into some sellers up here. Well, where are we? Here's our overnight low, overnight high. We're right in the range, bordering value. Again, Chairman Powell will be speaking today. A lot of expectations as to what he might say, might do. Some folks think he's going to be a little bit more hawkish than usual. Some think a little bit more dovish. I think there's been a pretty good amount of hawkish talk by many of the other talking feds. So we're going to have to see how this plays out. Back to the 30-minute chart here. There was something else I was kind of thinking about. Last week's high. Pivotal. It's been supportive basically since the open. We did close right on it, just below it, but we're holding above it now. Might be an interesting opportunity for us for an execution there. Take a look at crude oil now. So crude, I mean, this is back in December. This is the December high. This is the December low, 9 days apart. We've been inside of them ever since. This market has been wrestling with the supply and demand ideas since December, January, February, March. 3 months rotating, high to low, low to high, high to low, low to high, high to low, low to high. We're coming off that high a little bit now. Losing 2,600 in open interest yesterday on a recent high. Short covering. The retail traders always seem to get positioned in the wrong direction, and it seems that was the case yesterday. We're coming off those highs now. Random short time frame control for the last 3 months. We are in short time frame upside structure. Is that going to hold? It hasn't in 1, 2, 3, 4, 5 attempts. We're going to fail there again. Take a look at the 30-minute chart. So we did settle on the high yesterday, last week's high. We just ran through it, held above it. We're kind of bordering it now. We did close the gap here. Looks like here on the open. Oh no, here we are. We're on the open now. So we've got a slight gap. If we can't close that gap, we'll look for the market to continue this push to the upside. In short time frame, we are putting in higher highs, higher lows overall. We're going to see how this plays out. Take a look at the TPO chart. We have excess low. In the initial balance low is the low of the regular trading hour session. We've got a weak high up here. We've got a double distribution trend day, point of control high. We are opening in a potential area of repair. You talk about repair seems like quite a lot here, but when we open the following session between a point of control in the upper distribution from the previous day and the assumed point of control from the lower distribution on a double distribution day, there's a tendency for the market to auction to both sides. There's a high volume node here. Our point of control is the high volume node to the upside. We talked, I think, a little bit about this in one of the markets yesterday. Yes, this actually was in crude oil because we opened double distribution. We opened between those areas of high volume nodes. We was looking for the market to get down to this high volume node. It stopped short of this one, traded to this one, and then the market continued its push to the upside. Maybe we're going to see some of that repair today as well. Remember, we do have a weak high. What's a weak high is a market that has an unfinished auction. Auctions die in excess. The downside auction died in excess yesterday and did not die on the upside auction. So maybe there's some continuation to the upside. We've got our weekly kickoff at 82.90. 82.90. So there is space for the market to go. All right. Yep. CNBC. Chairman Powell is scheduled to speak at 9 a.m. Central, 10 a.m. Eastern. Here's the NASDAQ. Excess low, excess high, rejection at weekly kickoff high. Last week's high, somewhat magnetic and somewhat pivotal. What a market. We added 600 in open interest yesterday. By and large, relatively inert. We do have the weekly kickoff in play yesterday. Take a look at the 30-minute chart. So another situation where the market did not close the gap relatively early, gave us a pretty good opportunity to the upside with these long shadows up here. Buyers continued to try and push into this market and rein into sellers with a little bit more gumption than the buyers had. So the market turns, closes the gap, finishes settlement 12,323.50. And the market really just no overnight inventory, just holding on to some very shallow profits or shallow positive price action here, at least so far. Looks like we're going to be opening below value, but in range. Things can happen between now and 8:30, so we'll have to see how this market opens up, and we'll be together watching this in Make Hogue money, at least for the S&Ps. So no real threat of repair to the upside to the high volume node here. We're going to be opening outside of the high volume nodes. It's not really a double distribution trend day, but there's a distribution of volume and a distribution of volume. Again, weekly kickoff high, couldn't maintain price above. Take a look at the TPO chart. So what could have been a double distribution trend day ended up falling apart. No late spike necessarily. The market didn't close down there. Weak, kind of low excess, better excess on the high. Here's our overnight, very even bell curve, relatively even bell curve. Market's going to be probably moving to a different area at some point today. Which direction? Some of this may be somewhat, again, pivotal here at the last week's high. Take a look at gold. Lacey, no. You've been out twice already. Now you're griping. You're going to have to hold on, girly. You're going to have to hold on. I can get you as soon as I can. Gold, reversal pattern, continuation. Yesterday, added 5,000. So we got some naysayers into the short side here against last week's high. Those naysayers. So was kind of looking at the price action so far this week as a potential bull flag. Doesn't look like that's going to hold up, does it? We've got overnight inventory deep to the short side. And we're going to have to see if this market continues this push lower. We've got weekly kickoff low here at 1833. Last week's low considerably below that. This is going to be somewhat important, I think, for us. Last week's high above. Most important thing is the magnitude of this gap. This gap is going to be hard to fill. But with the overnight inventory that we're holding in this market, we could see a decent pullback short of a gap fill to give us an opportunity for an execution. I'm going to try and stay patient again. You know, everything we do today is so contingent and focused on Chairman Powell. I'm going to try and stay patient. Here's the euro. If you're looking for information potentially about the British pound, I know it's a little bit different, but this is what we've got for you now. We've got a kind of a dual pattern here. We've got a triangle formation here, but we also have a rising triangle formation here. Yesterday, we added 17,000 in open interest, but the euro, the currencies and futures are going to be rolling over on Thursday. So a lot of this increase in open interest and the low volume yesterday could really just be a function of rollover, because you got a lot of big traders moving positions out of the March contract into the June contract. And that kind of takes away some of the directional activity, right? So, J-Man, 70% is the value area that I put on my profiles, 70%. So, you know, we're kind of watching last week's high for opportunities. We're watching this low, this trend line here for opportunities. And, you know, in between, I think we're largely short time frame controlled. Take a look at the 30-minute chart here. So overnight inventory, a little to the short side. We've got a little bit of a gap that we've left on here. We've got some sloppy structure down below that could bring us back to an opportunity at this lower trend line. But we've got, you know, this trend line, which we've broken out of. There was only really 2 points of contact on this. Traded to last week's high, traded again to last week's high last night. We're kind of coming off that, and again, everything just depends so much on what Chairman Powell has to say. Week high yesterday. Look at the range in the overnight. The range in the overnight exact to yesterday's range, or relatively exact. Those are not necessarily strong areas for reversals. Look for the market to come down and check out these naked points of control. This gap, you know, after the late spike on Friday indicates that price is accepting higher pricing. So I'm still looking for opportunities to buy this market on weakness. But of course, we all know we have to be really kind of hyper-focused on what the dollar does, especially today. Here's the 10-year reversal pattern, doji, a little bit of indecision yesterday. We lost 4,300 in open interest. That's not very encouraging for the new longs. That's kind of a hollow day yesterday. Volume relatively low. Inside extended trading hour range today. Here's the 30-minute. So inside regular trading hour range today, overnight longs getting a little bit ahead of themselves. We're starting to see some reconciliation of those, and there's a poor high and a poor low and a poor low and a weak low or a poor low. I mean, this market is so rife with data points that don't seem to necessarily matter as much for the 10-year as far as the profiles are concerned, because they're just repeated over and over again. Here's what we're looking at. Weak low, weak low, weak low, weak low, weak high, weak high. The market just keeps leaving those prints like this, and it just makes it, for me, very difficult to try and find good opportunities to recognize what's going on with the market. We have some pretty decent excess up here, and that this point of control kind of gives us an idea possibly for an execution, but weak high, weak low down here, poor low, weak low, weak low. What is a trader to do with the 10-year? And we'll take a quick look at the natural gas. So we've got our weekly kickoff in the right spot now, 251. We went down to 250 and change last night. Reversal pattern here. This market is freaky. It's right back into this 2-week area of balance here, which is likely to be somewhat sticky. Here's the 30-minute chart. Here's the opening yesterday. Lots of shorts, continuing to hold, inside range, bordering balance. I don't really see that there's anything for us to do until Powell, his speech is released and he starts answering questions. All right. So we are going to be ready for make Hogue money here. Here's the guy. I call this his mafia picture. He looks like a mafioso guy, if you ask me, in this picture. He's probably in his 60s, retired, having fun, just goofing off. He's a great man. All right, we will get off that. Happy birthday, Pops. We'll look forward to seeing everybody for the for Make Hogue Money. Brazian, yes, you can. If you're on TS Trader, you can see I've got the March dollar index right here. But it's delayed information. DX. So just set up a quote board. You'll be able to see it. Again, that's delayed data, though. That is delayed data. Who was it that was? Alfred. So if this is where you're getting your information on this bulletin, this is where I get it. This is the preliminary. Remember, the final doesn't come out until after about 9:30. The only thing that's likely to change on the final is going to be the open interest. So I've got total volumes traded, total E-mini S&P futures. There's the total that I'm looking at. Here's the open interest and the net change in open interest that I'm looking at. We're going to be coming into rollover here, I think, next Tuesday in the a week from today in the equities. You can already see that the open interest is increasing in the June contract. So because of that, that's why I collect all of the information from the open interest, especially because in a market like crude oil that has so many different has so many contract months into the future, if you're not paying attention to the total open interest, you may be missing out on some information. So hopefully that's going to help. Okay, I'm going to get ready for Make Hogue Money. Let's take our deep breath. Stay humble, grateful, creative, and patient today, and centered in your trading, of course. And I will look forward to seeing you at Make Hogue Money. Again, if you can't make it, that's okay. We'll see you the next time, and looking forward to seeing you for the market reflection at the end of the day. So get out there and profit today, everyone. Trade well. Blessings to you, and we'll see you in just a few minutes.